the PepsiCo report was pretty encouraging if you're bullish on the story here. The first quarter showed good progress. Top line, volumes, international business was particularly strong. I guess the key takeaway here for investors, why they're looking at it positively today, is because their efforts to have a better balance between volume and pricing really came through in the quarter. Critics of the company over the last couple of years have been saying, look, all your sales gains are coming, well, not all, but most of your sales gains is driven by price increases. And so they made a real effort. They've reduced prices in most of their snack lines. And they're also adding a lot of innovation. And Frito-Lay, North America, combined with Quaker, put up a 1% volume gain. Now, that doesn't sound like a huge deal, but relative to declines, it was a positive sign. So all in all, it was a positive sign, and I think it showed or it signaled that they're going to hit their targets for the year, at least so far.
So when you talk about PepsiCo making its products more affordable, cutting costs, that was something that Elliott Investment, the activist investor, had been pushing PepsiCo to do. We know that Elliott built a stake in Pepsi last year. Things are now moving in the direction that Elliott wants to see. What other changes do you anticipate PepsiCo making?
Well, that's a good question, Scarlett. It's really what the focus was from Elliott was improve the margins, particularly at the food area, and so far, it seems to be making progress. Now, it's still unfolding will be the benefits of all this innovation and productivity that they're targeting. Now, keep in mind that it's happening not in a vacuum. It's happening with oil, rising, aluminum prices going up, and so that was a big focus of the call also, where analysts said, "Look, you have your plan. It seems to be moving well, but is the are we throwing a monkey wrench into the works here with oil prices and so on spiking up?" And they said, "Look, we hedge good 6 to 9 months. We've probably covered there. Supply chain's in good shape. They hinted at possibly raising price at the end of the year if they have to. But I think right now, if you're an activist, you have to be pretty pleased with the balance of the growth. And like I said, it's the international, it's the beverage, it's the food, all perform well in the quarter.
And Ken, with a lot of your companies, I look at the dividend yield, I look at the dividend growth, because that's such a big part of the investment story for some of your names. So for Pepsi, I got a dividend yield of 3.6%. They've been growing their dividend. What is their dividend policy?
They're committed to growing their dividend, and they have it pretty much a mid-single-digit rate. They selectively buy shares back. They're reinvesting, and they really do have a balanced capital allocation strategy. And I would suspect that's going to continue. I mean, a lot of the shareholders like those total returns.
Yeah, they certainly do. I mean, that's why you go into consumer staples, right?
Yeah.
For that steady payout. Ken, before we let you go, I got to ask you about what happens when it comes to pricing. Obviously, these consumer package companies are facing higher expenses with fuel costs going up. Logistics becomes a lot more expensive as well. What did PepsiCo say about pricing, about inflation, and how it sees prices moving forward?
Well, they were candid. I mean, they said, look, inflation's likely to pick up at the end of the year. And while we would certainly like to target more productivity gains to offset a lot of that, the hedging programs I mentioned before, and the price mix is improving. Some of the acquisitions they've made recently are really going to move that up higher. But they said, look, in between the lines anyway, pricing is not off the table just because we took it, early this year as part of this plan. So I think it's kind of a wait and see, as most companies are taking right now. I mean, no company is really immune to some of these inflationary pressures out there, and this is no exception.